Good afternoon, traders. This is Matthew GS. We're at episode 32 of the 51362 EMA strategy. It's currently 2nd of March 2025 and it's 3:21 p.m. in the UK. Welcome along to the stream. If you're brand new, please do subscribe, hit that notification bell because it does help the channel grow and you never get to miss our videos whenever they are uploaded. So welcome along. In this latest video, I'm going to be sharing obviously the latest updates with this strategy, all the trades as usual for the pairs and the markets that I look at, and there's a couple of new entry criteria that I've been testing and looking at for this strategy. So we're going to be looking at EMA breaks and how to catch those. And also we're going to be looking at entries off the 5 EMA, which I have previously looked at in the past. Now, just to get this part over and done with, we do have a free Telegram Trademasters group, link in the description to join. Our broker is FP Markets. We get to use any lot size in any market. I am affiliated with TradingView. We get the 20 free alerts with the basic package. Again, I'm affiliated with them, so description. There's a link in the description if you fancy joining that way. At the end of the video, I'm as always going to be looking at the market news for next week. Okay, so let's dive into this. I want to look at EURUSD first of all today. Now, let's just actually make this a bit brighter. So EURUSD, there was an opportunity on Monday, nothing really was happening. Tuesday we did have this institutional candle down here, and actually price has come up. We've slammed down into this institutional candle here, so we could have caught a buy on this institutional candle right here. Okay, and stop loss is actually below the wick because we would have got stopped out if we had it below the body. So this trade here didn't quite break this high there, and this would have been over a 1 to 2 trade if you caught this trade. However, if you had a TP above this high there, it wouldn't have reached it, and then it's just started to reverse. This is why it's sometimes good to observe your trades if you did get in this trade here and have a trailing stop loss, so you would have caught some of this profits rather than it not reaching your destination and then getting break even or getting a loss, right? So that was a trade that could have caught on EU for the buy. I mean, I think I took that trade. I believe I did. I can't remember what the outcome was, but the trade that I was interested in or wanted to test this new thing out was that EU has been bullish for a while, right? We've had this nice move up here. I caught this move here for the buy. This was on a few videos back, this buy on EU. So we have been on a bullish nice trend here. So you always got to anticipate when we're bullish and we're trending nicely, we're going to have a reversal at some stage. Now what happened was we did have another touch to the 62 EMA. So if you can see here, the 62 EMA alert went off, and as again we are on the 4 hour time frame, so the 62 EMA alert went off here. I used to buy instantly we touch the 62 EMA, right, if we're above it looking for buys. This time I'm more patient to see, right, is there a rejection away, are we going to carry on? So what I've done is I placed a buy stop on the opening of the candle that hit the 62 EMA and started reversing, right? So the buy stop was placed there, and I'm targeting that we're going to go on a bullish run, and you know, I've calculated the risk and all that good stuff. And then what happened was I got into the trade, so I got triggered. Can you see how this, so we did have slight rejection away, then this candle wicked up Can you see how this literally whipped up by a few pips? So I'm in the trade, and then this has started to reverse, and I'm thinking, right, okay, I might get stopped out, but I'm going to try something different. I'm going to set a sell stop if it breaks the 62 EMA and carries on going lower, because we've got targets below, there's always imbalance below, and there's always high lows that need to be taken here. So I looked at this and I thought, okay, I've got a target that price might want to go to. It's kind of the last down candle down here as well, so price could quite easily reach here and then start reversing, but it could also take out this low and then carry on going lower. So I said to myself, let's set a sell stop. So I've got stopped out, right? And then I've set a sell stop if price breaks below this low here, and you could set your stop loss there or there. I mean, you could set it there if you wanted, and that's what I did. I set a sell stop. I set my risk 2% risk this time, and my target was this low here. So it's just over a 1 to 2 trade, and that's what happened. I got stopped out at the initial trade. Price is broke. It's triggered me in to the sell stop, right? The way I look at it is the market doesn't stop for sell stops, and I'm triggered in, and price just goes lower and lower and lower, and my take profit is slammed. And that trade is actually this one here. So if I zoom in, can you see how I've set a sell stop just below this wick here, right on the 62 EMA, to say to myself, right, if it goes lower, I'm going to get into the trade. And that's what happened. I got triggered in, it kept on going lower, and my TP was that institutional candle there, as you can see there, and that is what happened. I slammed into the TP. Could I have held my trade for longer? Absolutely, I could have done. I could have, when my area has been hit, instead of being taken out completely out of the trade, I could remove half my lots out of the trade. That's something that I'm going to be looking to do moving forward. So then we've got half the lots left in the trade, and we catch the remainder of this move down here, and it's over 1 to 4. So we could have caught a lot more from this trade by doing that. So very exciting new entry criteria to catch these breaks, because the reason why I was thinking how to catch these breaks is, why wait? We can still be patient, right? For the pullback to the 13 EMA, but the pullback might not come to the 13 EMA. The pullback might not come to the 62 EMA. The market can just carry on going lower and lower and lower, because markets fall. You have to remember that markets fall faster on a sell or a short than they do on a buy. When you're buying the market rises slowly, but when the market reverses, it falls faster. The market always falls faster than it does on the other side. So because the market is falling so fast, the market probably doesn't have time to create a pullback, fill in balance, and then carry on going lower. So we can catch these moves if they happen in the future by just placing a sell stop, or the other side as a buy stop. And in this case, it was a good example, because we never got a pullback to the 13 EMA. We never got a pullback to 62 EMA, but it doesn't matter. We caught this move right from the start, and it was a great trade nevertheless. Another thing I've brought up many videos again was the 5 EMA entry. And for the 5 EMA entry, you just literally set the price. So if you come here, go to our indicator, we set the price. So this is EU crossing the short EMA, right? Always remember that you want to choose the furthest away date, and then you can set your your entry alert to say 5 EMA. So you could put EU 5 EMA crossover or EU crossing 5 EMA, right? So then for this example here, or this example here, I mean, there's not much of a move to catch, but the idea is when the 5 EMA alert goes off, you then set a sell stop there. Stop loss can be above the high there, and then you got your targets wherever you want to go. So the alert goes off, and then the market just carries on going lower, and it's probably easier on this one here as an example where you get slight pullback. So these two candles here, 3 candles actually, 1, 2, 3, the 5 EMA alert would have gone off 3 times, bang, bang, bang. But it's best to do it on the last candle that couldn't break, or the last candle that set the 5 EMA alert off. So you would put a sell stop on the opening of this candle here. TP can just be above the high or above 13 EMA. And then this was nearly a 1 to 2 trade. So you can catch these moves because the price did not reach the 13 EMA, but we've still got in because we've got in on the 5 EMA entry. So it's just another entry criteria, so we're not missing these moves, right? So there's 2 new entries, the EMA breaks and the 5 EMA alert entry. So yeah, ones to add to your arsenal. And another thing before I do forget, I have updated the bid and the ask line or price to this pinky red color here, and in between this is the spread, right? And before I had, which I didn't really know, I thought that was to do with the spread, but it's actually not. There's something called the value line. See this here, it's called the value line, and I had this on. So if I put this on here, I thought this to do with the spread and the bid and the ask, and it's not. So the value line is this white line here, and it's currently on the body of the candle, and it's kind of like at the opening of the candle. So if I go to a different market, maybe US 30, can you see now how the white line, the value line, is on the body of the candle here, right? So it can be a bit confusing. I've turned it off now. I just think it's a lot better. There's no real need to know the value line. I mean, you can do if you want to, but it's just telling you, right, this is the body of the candle, and this is the value of the candle or the price or this market here. I just turn it off. There's no real need to have it, and it can confuse things. So I just put this back to black, and then that gets rid of it. What we want to pay attention to is the bid and the ask price, which this is important to have on, because this is currently where price is, right? We go back to EU. So this is currently where price is right now. Price is not here. Price is not where this wick here. Price is not there. Price is reversed, rejected, and this is currently where price is right now. Bang, bang. Right? So that's what I thought I'd give you an update. That's if you do have that value line, I would say just get rid of it and just have the bid and the ask line. Let's move on to Bitcoin now. So Bitcoin, if we was to get in on a 5 EMA entry, we could have caught this gigantic move down. And I was being a bit patient waiting for the 13 EMA, but that never came. We never got a 62 EMA alert. So straight away from Monday, we've just absolutely tanked from nearly 100k to 78k, so that's a huge drop in Bitcoin's price, but we never got a 13 EMA alert go off once. So missed this whole move down. But if we was to get in on a 5 EMA, so all these touches here, the 5 EMA would constantly be going off, and we can calculate our risk, right? So we can go, right, when the next 5 EMA alert goes off, I want to get in on a sell, and I'm going to put my stop loss just above the candle that went in through the 5 EMA, and the next candle, so we can set this at 2%, 3% or whatever, then the next candle, it's gone lower. There's always targets below with imbalance and institutional candles and taking out lows and all that good stuff. So if we got in from here to where price is there, that's nearly a 1 to 14 trade. So we're catching these trades from the start and not waiting for the 13 EMA alert. Now, if we do get the 13 EMA alert go off, then you can double up on your trades and stack the winning trades with another position. So, for example, if we're in here and then lower down here, we get another wick up into the 13 EMA, then you go for another short, right? Because we've just got another entry criteria, and then you catch another move. So you've got two positions open on Bitcoin, right? I mean, as an example here, there's 1, 2, 3, 4 rejections away from the 5 EMA. So we could put a short sell stop there. Stop loss can be just above these highs like this. And then the next candle that prints, we're in profit. And then we've caught this move down here, and that's a 1 to 10 trade. So another good entry again is the 5 EMA entry alert. The reason why I stopped it beforehand was because the 5 EMA was constantly going off, so you have to keep that in mind. So maybe just take the ones that look very good, but again, we're going to get to catch these big moves down because we never got a 13 EMA alert go off, right? But we've still been getting these 5 EMAs. So looking quite good with the 5 EMA entries. And gold. So I caught this move on gold, which I was very happy with. That is this trade here. This is posted in the Trade Masters free Telegram group. This one hit take profit. So what happened with this? Gold has been bullish for a long time, anticipating that the bearish move is going to come. I didn't set the sell stop to the break of the EMA because I was only testing that first on the EURUSD, but with this one we got the break of the 62 EMA, and then on Wednesday, on Wednesday we did get the pullback to the 62 EMA, and can you see how we just could not break the 62 EMA? This is wicked up, it's rejected. This is wicked up. We've actually gone into the 13 EMA and is rejected. So as I'm seeing this, I've put a sell stop on the opening of this candle here that has rejected the 62 EMA. I could have put it on this candle, but I decided I'm happy with this one because we're getting two rejections away. Stop loss was around there, I believe, and I was targeting this low down here, and this was a 1 to 2 trade, and this was actually in the night. So 3 a.m. I was asleep, and then I've woken up, and I think it pretty much hit take profit as soon as I woke up, and that was 1 to 2 trade. Now looking back again, I could have took half the lots out and left the other half the lots in, and then caught a just over a 1 to 5 trade. So I'm catching the remainder of this move down here. But I've just gone out at a 1 to 2 when really I could have caught a 1 to 5. So it's all lessons learned. I'm always learning, I'm always improving as the weeks go on. And I encourage you to do the same thing with how you like to trade as well. But gold was a very good move to catch with this strategy. This was beautiful because we had the break, we had the retest, and then we got in for the sell stop to catch this move down. So yeah, very happy with gold. US 30, I believe I did get stopped out on US 30. I took a high risk trade. And yeah, so my high risk trade was, I mean, I don't know why I do it to myself, to be honest with you, because we're below the 62 EMA. So really we should only be looking for sells. But I was thinking I want to catch the reversal of the market, right? I just thought I'm just gonna go for this. So we had the 5 and the 13 EMA crossover here. That's criteria number 1. We're buying low. That's criteria number 2. Right, we're buying low. Criteria 3 is we have this institutional candle down here, this last down candle here, before this up move, right? So then I've set a buy limit on this candle here. Stop loss is there, and then take profit. I'm going to the 62 EMA. We did get this candle wick down, and then the next candle did wick in, and I thought, okay, this is looking quite good. And then yeah, it just took me out. So 2% down on that trade. You know, it is what it is. We can't win them all, but when 3 criteria was met, I've just taken the trade, because if I didn't take the trade and this just went on a massive bullish move higher, and I've had 3 criterias met, then I'm going to be kicking myself and saying, well, why didn't I take the trade? I've had 3 criterias met that's hit my checklist, you know, and it is what it is. We don't win all of them, and the market just took me out. And then we did go a little bit higher, and then yeah, US 30 didn't really do much from where I wanted to get in this week. Like Monday and Tuesday was kind of sideways. Well, most of the week was kind of sideways, and then just carried on going lower. I do believe actually I did take a sell. It's hard to tell because I don't with my broker. I do take a lot of trades. I don't always post them in the telegrams. I'm quite busy as it is with a lot of things, and I don't always have time to post my trades, but I might have taken a short position, and it might have been, yeah, so we've had the 5 and the 13 crossover on the flip side. And then I might have taken a sell position here. And then market, yeah, I think I might have done a sell stop on this candle here like this, and then stop loss like that, and then targeting these lows down here. So yeah, the market did reverse, it did go lower, and then it just went higher, and then I think I got break even because on Friday this just wicked up like this, and then it's just gone straight into the 62 EMA. So I might have got break even, I might have got a bit of profit. I can't really remember, but I do remember taking a short position. And in the end, yeah, US 30 was a no-go really. As you can see, if we zoom out, it just been hovering around this area here. But nevertheless, if we did go back to the other week, we could have caught the break of the 62 EMA by having a sell stop, and then we could have had the 5 EMA entry go off here. So we could have caught a short position from here, right? Because we've just gone into the 5 EMA, and that would have been a 1 to 8 trade, just catching this here, right? So yeah, it's looking quite good for the breaks and the 5 EMA, just testing something new out, so we're not waiting for that 13 EMA alert to go off. And the 62 EMA doesn't always go off as well because it's quite far away. So we're just looking to catch these movements on the short interim and still catch the movements down. Moving now on to GBPUSD, and I did take a GU trade, and the GU trade actually, yes, so the GU trade was the break of the 62 EMA, and it's kind of textbook, so it looked very similar to the gold trade. We've had the break of the 62 EMA. We have, we've gone into the 62 EMA, we've rejected, so the 62 EMA alert's gone off. The next candle that's printed, we've gone through it again, we've rejected. This candle has gone through 62 and the 13, exactly like the gold, and it's completely rejected. So I've gone in with a sell stop on this candle here, just above the candle's high, if you want to do it really tight, or you can have a little wiggle room. And then this was, I mean, I closed this on Friday, and it was pretty much a 1-to-1 trade, which, you know, is fun. I'll take it for a Friday. And that's it. That's all the trades for this week. Saying that, actually, there was a GU buy that worked out well. I actually missed it, and the reason why I missed it is just because of timing, and I was in other trades. So this will be the last trade to show you this week. So Tuesday, we're above the 62 EMA. That's criteria 1. Criteria 2, we've had 5 and the 13 EMA go off. We've also got an institutional candle here. That's 3 criterias. We're buying low, and we're buying the low candle here. Then we go for a long position, and a buy limit would have been great, like this. And then TP would have been good for this high like that. If you took that trade like that, that's going on to a 1-to-2 trade. If you held it a bit higher, I mean, there might be imbalance to the left or another institutional candle over here. Look at that. It looks like it's an institutional candle that it actually rejected from. So this is a reversal area here. If we look left, we go back to here. Yep, so we've wicked into that area. They've mitigated their positions, and then they've reversed the market. So if you did look all the way left, you could have set a sell limit up there and caught this movement all the way down here. But don't always have to catch those movements from the left. But that's might be one of the reasons why it's rejected from there. So if you did hold the trade 2 up there, it would have been over a 1-to-2 trade. The reason why I didn't take this trade was because it wicked in at 2 a.m. and I was asleep. Next candle was 6 a.m. I was still asleep. The next candle that printed at 10 a.m. we started to move, and I think we was around here. And I was like, do you know what? Nah, I'm just gonna sit this one out and just observe what's gonna happen. But yeah, looking previously, that's what happened. It went into the institutional candle and it's gone higher, and then it's reversed. But nevertheless, it's just training our eyes, and it's just seeing these things happen over and over and over again. So I think that's all the analysis I've got for the pairs I'm looking at. Bitcoin is currently at 87k, so it is starting to go higher. We have had the 5 and the 13 EMA cross over, and yeah, so we've had the 5 and the 13 EMA crossover. We've wicked down into the 13 EMA. Where this is currently where price is now. We could still get a reversal back into this area here before going higher again. So we'll be looking at this moving forward to look at catching Bitcoin for the buyers, but you never know, this could carry on going lower because we are below the 62 EMA, and it's just, we just have to get in on the alerts and when our criteria is met. So that's all the trades, all the analysis for this week. I have opened up, if anyone's interested, the Trade Masters Coaching VIP, and I've opened this up again because I do have some free time in my diary for anyone that's got questions. If anyone's that's a bit stuck with this strategy, if anyone needs like guidance or mentorship of how to really level up and improve with this strategy and how to use it properly, I'll also be giving a lot of value, and I'll also be giving courses away, audiobooks, ebooks, everything I've got basically in my arsenal. We'll be passing it over to you to help you on your journey. It will be affordable, and I'm just putting together a package right now. So if you are interested, then please email me at matthewgsuk1@gmail.com, or you can message me on Telegram and I can give you some more information. So I appreciate everyone jumping on. Before we do close the stream, I just want to quickly look at what's going on for next week. So Monday, we have some Euro red folder news. So anyone trading Euro USD or any Euro pairs, keep an eye on Monday. There's actually some red folder news for the US. Tuesday's a few red folder news, but nothing too much. Wednesday, a few Euro, some more Euro, US dollar, red folder news. Thursday, there's some red folder news, so keep an eye on the US pairs. And then finishing up on Friday, there is Euro red folder, and we do have the NFP, so it's non-farm payroll on the Friday. That's really gonna move the market. So if you're in any positions on the Friday, which is, I think when I caught like 8,500 pips on US 30, I was in sells from Wednesday or Tuesday or Wednesday or Thursday or whenever it was, and then I thought to myself, let's see what happens with NFP, and it was negative news and it just completely just tanked even further down. So that's something to keep in mind, that don't just close your trades on the Thursday. If you're aware of these red folder news and you're already in a trade, yes, move your stop loss to break even, all that good stuff, but keep your trades open and see what happens with the news, because you could get a lot more pips banked just by riding the news. And if it goes in your favor, then yeah, your quid's in. So yeah, keep an eye on the Friday, and that's it. That's it for this week. I appreciate everyone jumping on, and let's have another killer week. See you in the next one. Bye.